This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your livestock roundup. We are seeing live cattle kind of trade in a relatively mute range after seeing a lot of positive momentum in yesterday's session. A big resistance pocket right around the corner for us for that August live cattle contract, 106.50 to 107. This was previous resistance over the last couple of weeks and has really been a spot where we've seen a lot of trade between the bulls and the bears as far as interaction goes. If we can achieve a closeout above here to wrap up the month and the quarter, I wouldn't be surprised to see the market continue closer to that 110 and narrow the basis with that cash market, which is still a little bit closer towards that 110 mark. Now, as far as the feeder cattle are concerned, a little bit less optimistic. We had a limit up move yesterday, which put us in expanded limits today, but the fact that we were not able to take any advantage of expanded limits and could hardly hold positive trade through much of the day with lower corn prices is a caution flag. We have trend line resistance coming in above the market, 137.50. That's really where we stalled out above. So seeing a little bit of profit taking off that resistance level, 134 to 135. Technical support break and close below there takes us to new contract lows. Now, wrapping things up with the lean hog market. Lean hogs, we continue to be friendly this market, but want to look a little bit further out in time to the December and February contract. We think the ASF is going to continue to be a bigger and bigger problem as time goes on, and we're going to see China step in and be a bigger importer of U.S. pork. We saw them step in this morning in today's export sales, and we want to see that continue to be a trend with bigger quantities. So the technicals, not necessarily the best right now for that August contract. We've made lower lows and lower highs for several weeks now. Need to get a closeout above 77.90 and then 80. 80 is really where we broke down. If we can start to achieve consecutive closes out above there, I think that changes the tide and money flow and could potentially propel us higher over the intermediate term. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.